it is relatively easy for a firm to determine how much cost they have already incurred. But often what a firm really wants to know is how much it will cost them in the future. In order to do this, we need some simple ways to estimate future costs. But before we do that, let's review various cost behaviors. In a previous chapter, we had talked about how costs behave within the relevant range, that is, the range of likely activities. We said that total fixed cost was expected to stay the same within the relevant range. In other words, we treat these costs as fixed because we don't expect them to change within our likely range of activities. This would include costs such as rent, depreciation, supervision, heating and air conditioning costs. However, that means that the fixed cost per unit is going to decrease as our activity level changes. In other words, as we make more units, these fixed costs will be spread out over more units. Because of that, each individual unit carries less fixed cost. We also said that total variable cost is going to increase in proportion to our level of activity. As we make more and more units, we are going to incur proportionately more of our variable costs. The reason for that is that the variable cost per unit is expected to stay the same within the relevant range. And we remember that that may not be true at very low levels of activity or very high levels of activity, but it's probably true within our likely range of activities. So, my question to you is, can we use our understanding of these cost behaviors to predict future costs? Well, there are several ways to do this. One way is to use engineering estimates. This method is used almost exclusively for firms that are making new products or are incurring new activities for the first time. If a firm has done something before, it's much better to keep track of how much time, how much labor, how much materials, how much electricity were used. But if it's doing something for the first time, it does not have that information. So instead, we try to rely on somebody's best estimate of how much it will cost in the future to do things. So, how are we going to estimate costs? We're going to take a look at how much work is involved in a task. So step one is going to be to look at what goes into our products. Usually that's materials, labor, electricity, etc. Then we're going to try to estimate the cost for each activity that's involved in producing this item. We could rely on time motion studies so that we could observe people doing the kinds of tasks that are involved and then estimate how much cost we would incur for that time. So, is this a good way to understand how much it costs us to do something? Well, it has its advantages and its disadvantages. It forces us to think about each step that we need to perform, and it allows us to compare this process to other processes that we do. And the biggest advantage of engineering estimates is it allows us to estimate costs for something that we've never done before. However, this procedure does have some disadvantages. Number one, it can be very expensive to perform these estimates. It takes a lot of time. We may have to have some specialists come and observe what we do. And of course, these engineering estimates are generally performed under optimal conditions, not ordinary factory situations. Another way to estimate costs is to look into our accounting records. This is a good way to estimate costs if we already have data from the past. So, what are we going to do? First, we're going to look through our accounting records and identify all of the costs that are related to the thing that we're trying to understand. Then, we're going to categorize those costs as fixed or variable to the best of our ability. So let's take a look at the accounting records for Charlene's Computer Care and see what we found. We already had in our accounting records our total costs for various categories: office rent, supplies, training, whatever. Now we need to think to ourselves what portion of each of those costs could be considered either variable or fixed, so that we use up 100% of the total costs either in the fixed or variable category. Once we've done that, we can add up our total fixed costs, and that is going to be our best estimate of the total fixed cost for this particular product or activity during the period. For our variable cost, we need to look at some activity measure. In this case, this firm doesn't produce a product. They repair computers. During the period for which we collected data, Charlene's Computer Care used 360 repair hours. We can divide that into the total variable cost, and that will tell us that on average during this period it cost Charlene's Computer Care $12.25 per repair hour. So now we can combine that with our fixed cost, and we have a pretty good equation for predicting future costs within Charlene's relevant range. So our formula is that our total cost is equal to the fixed cost plus the variable cost per unit times the number of units. For Charlene's Computer Care, for the 360 repair hours that she worked during this period, we would take the total estimated fixed cost from the previous slide and then $12.25 per repair hour times the 360 repair hours that she actually worked. And that would give us an estimate of the total cost, $10,626, which has to equal our actual cost because this is the number of repair hours that she actually used in that period. Now, how does that help us predict the future? Supposing that next period she thinks that her firm is going to be a lot busier. She estimates that next period she's likely to do 480 repair hours. All we have to do is substitute that number in our formula, and it tells us that at that level of activity, she should budget, she should expect a little over $12,000 of costs. How good is this estimate? It really depends on how predictable her activities are. The more regular her activities, the more regular her costs, the more likely that this will be a good model. So, why do people like this method? Number one, everybody's familiar with the operations, everybody is familiar with cost behaviors for this particular firm or industry. On the other hand, sometimes managers or accountants may have an agenda of their own. That is, they may want to make their department look more efficient, or they may want to make it look less efficient so that they receive a bigger budget in the coming period. Formulas have consequences, and because of that, we should have some methodology to make sure that the formulas that we use are reasonably aligned with the underlying economic conditions of our organization. So now, let's do a practice problem. You have taken a look at the overhead for your company, and you've acquired some information about how many labor hours were used, how much total overhead was incurred, and you've made an estimate that about 40% of your firm's overhead is fixed. Your job is to estimate the total overhead for the coming month if our expectations are that we will use 475 labor hours next month. Let's take a look at the solution. We believe that about 40% of the firm's overhead is fixed. That means that our best estimate is fixed overhead is a little over $5,000. That means that if we take our total overhead and we subtract out the portion that is fixed, we're left with about $7,650 worth of variable overhead. We can take that amount and divide by the number of labor hours that we use during the month. That tells us that our firm is using about $17 of variable overhead per labor hour. Well, at 475 labor hours predicted for next month, that means we would expect to incur the same $5,100 of fixed overhead plus $17 per labor hour times the predicted number of labor hours. Altogether, that tells us that for next month we should budget about $13,175.